The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. I have to wake you up after that music there. Oh, my goodness. So, all right, let's check out the S&P. The S&P is down 2 points right now. We got the Russell up 5, the NASDAQ down 2, and the Dow is down 3 points on the day. And let's look at where our metals are at right now. We got copper down 0.09. We got gold is up 70 cents. Pretty quiet there. We got silver is up 0.063. And looking on over at our energies, we got natural gas is down 0.039. Oil's down 39 cents. Corn and soybeans. Corn is down 2.75. And soybeans is down 7.50. And that gives us our update right there on just the currencies. Looks like they aren't even feeding through. That's pretty weird right now. Well, we'll pull them up and we'll look at each one of them as we go along. Okay, so that gets you your market wrap, at least on your futures markets. And like I said, it's sort of weird. Thinkorswim's just not feeding FX right now. So let me try to retype it in and see what comes on up. Yeah, another net change in there. Probably with the holiday messing it up. So that is possible. Some of the systems will act a little weird on holiday days there, but that's still pretty odd. All right, either way, let's get on track and see what we can find over here. Okay, so maybe we can, pull up a couple markets. We'll also hop in and look at the news, see what we have on the week. And we just got a 5-minute potential there on oil. Let's see, the low 103.37, low 103.38. All right, we'll watch this one for a minute. I might have a little spike striker going on. So, right there. Okay, so let me pull up our news reports, and we'll have that on our list of potential trades as well. Okay. Throw this up here, throw this to the left so I can keep an eye on this report. And let's check out what news is coming up. Not really much for this morning. I mean, Canada had a little bit going on. It's like that trade is not going anywhere right now. But I'll pull up another one. We'll use that for dollar CAD over here. Let's see what happened this morning with the dollar CAD. With all the news that came out there. I mean, it just wasn't the biggest thing, but I want to pull it up anyway and walk through it with you so that way you can see any impact on the news. It's one that we didn't really weigh out a news plan for, but I want to cover it. And okay, so on that, the chart ought to be rendering over here in just a second. We can see a little bit of a move there around 10 o'clock when the IVPMA came out. The building permits didn't have as much of an impact. But looking at it there, here, we'll throw all these here so we can see everything. There we go. And we'll throw oil over here on the right side of the screen. We'll throw our news on the left side. Turn off the chart topper there. And now we can look at a little bit of everything at once, see if this sets on up. And basically the spike tracker is pretty simple. We wait for a spike, a volume spike. Then we see if the market is able to break down below that low. We are here near the end of the hour. We got a lot of time left in the hour. And so at this point, being that much time left in the hour, I'm not real comfortable with an in the money if I can avoid it. just because I usually don't expect the market to move fast enough. Not fast enough, but I don't expect the time decay to basically be fast enough to make it worth doing an in-the-money contract. But we were looking for a break below. If I can get this thing to click off there. There we go. Looking for a break below 103.37. And looks like we're getting down to 103.38. Still haven't broken that 103.37 yet. And I'm watching it. You know, and there's the technical rules where it has to break it like on the very next bar. But then there's the reality of trading where you basically, once you got the concept down, you can look at the volume, you can look at the bar, you can see what it's doing, see if it looks like the market is sort of, you know, chilling out, if it's going to work with it. We got volume definitely dying down, looking for a good flat trade. I just want to see if we can get a little bit of movement on this. It looks like, I mean, we have plenty of room left in the trade to have some potential movement. And if I go in, I'll pull up the binary scanner. We'll come back here to oil or CAD real quick. It looks like it's, you know, looks like it's trying to move down, so I want to be ready for the trade in case it does pop up for us. And it looks like, what do we got on oil? And on oil, what I can do, like I said, I can just pull up the scanner and scroll on down here and see what do we have. And being at 103.40 right now, let me get rid of my simulation prices, get rid of all that nonsense there. And then to see, okay, so we got anything below 103.40. So 103.31, 103.11, pretty cheap right there. So 31, 65.50, obviously that's well within range. So that's right here. And then we got, looking a little bit further down, 103.11. That's actually within our expected movement on the hour. So it's something that's, you know, at least considerable. And so what would be the best way to play this out? Well, there's a couple ways to do this. Both of them are low risk. We got 103.51 as well. That's up here. That's also within our range. Not a big fan of that. I mean, $25 isn't bad. You can get out for about 50. So that's one way to play it. Let's see here. 103.48. That's at least above our high of the hour. And so, again, looking at Nadex binaries, in case you're new to Nadex, hop on TFNN.com. Click on the Nadex banner on the right side. I'll show you that here in a second. But let's see. This volume is just really, really dying down. That's why I'm taking just a little bit longer to see if this is something I really want to hop into. We had some nice volume right there this morning. And this is usually our quieter hour. It's after the inventory reports, you know, come out on Wednesdays, and just looking at the, you know, the cycle, this is lower volume, but it's still the expected movement during this hour. So I'm just trying to see, is there even a possibility we're going to get that move based on volume? And we got volume going down on the, what you could call an up close by like a tick, right? And here, make those bars a little bit more visible. There we go. So it's trying to plot. Let's see here. It just plotted right over here down again, 103.38. But it's not yet broken, and I'm going to make it break it before I take it out of the money. And so the out of the money choice would be right over here, 103.31 and 103.11. And then the in the money choice is 103.51. And now that's already down to $22. That time is decaying. So it'd be an aggressive entry to try to take the in the money right now, simply because we did not break the low, even though aggressive entries actually do work rather often. And we'll see how well do they work on oil. Okay, so let's go back and look at it. Right now, I'm chilling out on the trade. But if we go over here and look at it, okay, so you got the spike, then does it break the low? We got low, and then a low, and then finally it breaks the low in the next bar. Took one extra bar, but expired in the money. So if it's the spikes above it, we're going short. That's that volume spike right there. Then we got spikes below. All those expired in the money as well. This one right here it broke the high. That one would have lost this morning. So these two would have won. That one would have won. This one, I guess jury is still out. So let's see. That one would have been profitable, and that would have turned into a butterfly. Would have legged in, probably got out on both sides before it got there. Same thing right here. Both worked out. But just, yeah, we're going to sit back on this trade for the moment. Don't really see just a lot of activity to get me real excited about it yet. All right, so while that's over there on the side, let's go over here. Let's check out the dollar CAD. And on the dollar CAD, we had some news come on out. So let me pull that up here. There we go. And we'll pull our news up over here. We got our IVPMI, came out at 10 a.m., and let's see what kind of movement we got on it. Not a usual move. That had a nice big move on it. But right over here, we got a move just off the IVPMI, about 37 pips, so not too bad. Then market just chilled out, went flat after that. We had the, and let's go over what the numbers were, how they came out, so we can see the comparison there. IVPMI came in a little worse than expected at 46.9, and therefore the CAD getting weaker comparative to the dollar. Building permits, however, did come in a little bit stronger at 13.8 on an expectation of 3.1, and they revised up the previous number. And then that's pretty much our news this morning. Not a whole lot. As far as tonight, we got the business confidence report. It's not an actual versus forecast number, so it's not really one that we're going to be looking to trade heavily. And let's see what we got coming up for the rest of the week. So, like I said, I'm keeping an eye on that trade over that oil trade, but right now, just not seeing a whole lot going on. At best, I mean, the end of money trade, aggressive entry, about the only trade you'd have right now, like I said, on the oil trade, sort of hopping back and forth between these. All right, so with that, and if you want to know what that trade would be, like I said, this would be a very aggressive entry, but you'd be going in at 103.51, a sell, somewhere between $21 and $25. You have to exit if it hits 103.51. That's very, very important. Otherwise, you're just looking to get hosed on the trade. But anyway, so we got that trade in there on the in the money. But on the out of the monies, I really want to see it break below the low. I want to see that there's a little bit of velocity in our favor before we just go grab it. And so if that happens, then I'll pull it up. We'll talk about it. Okay. So back on over to the news. Let's see what we got coming up this week. And what I can see, well, we'll be back right after this break, and we'll get you ready and going for the upcoming week. We do have a few reports that we definitely want to focus in on. Stay right there. We'll be right back after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, come on back here to the Diagnostic Trading Hour. And let's see where everything's at right now. Okay, so we're going through and we're looking at all of the different potential trade setups that we have over here on, let's see what we got. Okay, so we got that right there, and okay. So I'm trying to look at this oil trade, and now it's popping up a little bit, just trying to see if it's going to break down or not. Maybe we get a volume spike in the other direction, but it doesn't look like we're setting up for another volume spike at the moment. So just watching this one. So aggressive entry is going to might get hit here. I don't know. But conservative entry, obviously still pending. We'll see how it ends up. It may just oscillate right around that level. It's right on the 0.5 deviation line. So that's going to act a little bit as a magnet, sort of a mini magnet that it has pulled itself back to. We'll see how it plays out. Okay, let's go ahead and look at the rest of the week. That's the big thing I like to do on Mondays more than anything. You know, may do a trade if we see one. May pull. I'm still watching for an out of the money. That thing may still just fly down. But I'm still watching it just in case. And a reminder, when you are looking at those out of the monies, always look at current hour and next hour, because sometimes you'll find that you can get a next hour just as good. So always make sure you're looking at both. I mean, sometimes you can, sometimes you can't. But, you know, if they're dailies, it may be a little bit harder. But it's always, you know, worth checking out to see if there's, you know, something there for you. Okay. So that one's doing its thing. What we have on the list for the week, major reports we got going on are going to be, we're going to have CPI. We could look over that in Switzerland. That's a report that we don't do too often. We got manufacturing production in Britain. We're going to have housing starts in Canada. House price changes in Australia. Oh, no, that's going to be Britain. Employment change in Australia. And then we're going to have the bank rate for Britain as well, which can usually is actually a pretty decent neutral trade. And then, jobless claims, home loans over in Australia, and employment change end of the week here. Let's see here with Canada. Okay. So with all that brought up, let's go down. Let's pull every trade up. First, let's check out the dollar franc. Let's get our plan together for it and see what we can do on that one. The report is going to come out tomorrow morning at 3:15 in the morning. So hop back over to July 8th, 3:15 a.m. And we got the CPI for the Swissy. Also, retail sales coming out at the exact same time. What is the average move when the CPI number comes on out? And it's an inflationary number, has, a little bit of an impact, but is it a big impact? Is it an impact that we can take advantage of? Is it a trade that we can do a neutral trade on? As you know, often I do, the trades that I like to do on this involve going in and doing neutral trades using Nadex spreads. And just in case, again, you're new and you don't know, check out TFNN.com. Click on Nadex right there on the right side of the page and get access to the Nadex exchange, the North American Derivative Exchange in Chicago, regulated by the CFTC. Been around for quite a while. Check it out. It is awesome. It's basically options for day traders. That's what it comes right down to. And so you can hop on over to education. You can learn a lot about it there, the webinars and everything else they have. You can check out their demo trading account, the trading platform, and get a demo trading account, mobile trading account. They got iPhone, they have Android, they have Windows Phone. If you click on the demo trading account, you fill in the username, first name, last name, phone number, and email address. Click apply for demo. That'll get you all set up. Maybe you're a futures trader. Well, how would you like to build a hedge off your trades? Maybe when they're in profit, you want to lock in that profit. You don't want to close it out, but you don't want to give all that profit back, and you want it to still have room to run potentially. Well, there's a way you can do that with the Nadex spreads. It's sort of like a call or put, but it expires same day, maybe even same hour, next hour. So maybe you put it on right before the news. There's a lot of ways that you can use them, or you can use them just out of the gate to limit your risk. So like I said, quite a few different ways that you can trade on Nadex. We'll start going over those, a little bit of a cycle of those again. We haven't done that in a while, and talking about details like how do you do hedges, how do you do straddles, how do you do condors, how do you do strangles, how do you do double binaries, and so we can go in. How do you scalp? Maybe you're a scalper and you'd like to know how to. Now I'm not talking about scalping like just randomly throughout the day as the market's moving, but like around definitely like pivot levels, deviation levels, fib levels, things like that. Oscillation zones, basically. How do you scalp, but with very low risk, but still using the futures to scalp with the spreads to lower that risk? We'll talk a lot about that this week. When we come back, we're going to go into the specific news plan on how to trade the news using Nadex. Stay right there. We'll be back right after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, come on back here to the Diagnostic Trading Hour. Okay, so let's go ahead and start knocking out this report right here. We got the CPI set on the Frank, and I'm just going to go through this really fast for you so we can get the week down as quickly as possible. All right, the last report that came out, we're going to be looking for about a 7 a.m. expiration on this trade. It comes out at 3:15, so we're going to be getting in at 11 o'clock. So an 11 p.m. entry on a 7 a.m. expiration, looking at the Nadex spreads to do a iron condor on these trades. An iron condor is where we buy the lower spread and we sell the upper spread. It's the basically opposite of a straddle. And looking across the board at pretty much all these moves, if we can go in and we can pull off 25 pips of profit, okay, which means a minimum income of $25 between the bought spread, lower spread, and the sold upper spread, entering at 11 p.m. for a 7 a.m. expiration. The dollar Frank usually stays well within that range, at least by expiration. May oscillate a little bit on us, but by the time it expires at 7 a.m., that should work. So 25 pips minimum profit on the Frank CPI. All right, let's go in and look at the pound manufacturing production report. And let's see what we get on it. Okay, we're also be looking at a 7 a.m. expiration on this one. We'll be looking at as early as an 11 p.m. entry on it. And let me just see how big this usually moves. And if we get much pre-market movement, one of the things I'm always looking at when I'm looking at these trades we're getting in early is does the market move that much, like say from 11 to the announcement. So because that obviously can have a pretty big impact on our trade. Scrolling on down, looking at it, we got let's see, 30, 75, 90, 80. So 20, 80, 27, 100. I mean, we can get some big moves on here. 100 pips, so we get some really large moves. It's one of our biggest move reports. I definitely say straddle this. See if you can pull it off for $35 or less. Okay, that ought to, ideally bring you in at a close to break even if we don't get much of a move on it, but give you the potential to potentially make a nice big profit on the trade as well. So, like I said, it's close to, ideally $35 or less. You may have to go to 40. I'd say 40 would be my maximum I'd be willing to go on this. But ideally $35. Looking to take profit at a 1-to-1 on either side. But when it goes, it usually doesn't look back. Okay? I'm just trying to see if these moves are going to line up well enough for us. And if we're getting enough of them early enough. Some of these moves are happening. It looks like a little bit later in the day. That'd be like a 3 p.m., but we're not really going for a 3 p.m. Yeah, let's see here. Closing. Yeah, right about, this is a little bit tougher report. Yeah, $35, really, like I said, you're going to break even if it doesn't take off. If it does take off, then you have a nice profit on the trade. It's about a 50-50 trade on it. I'd say 50% of them break out more than 35 pips, okay? Then about 25% of those hit about 35 pips at expiration, about 25% of them like 10 or 15, which means you lose like $20. So the ones that take off really can help, obviously, overcome the ones that don't, but the ones that just barely move there, obviously that's not going to impact you. So over the course of a year, looks like that's going to work out well. So I'd say, 35, 40 would be my maximum, but obviously the cheaper the better. Now, if it's really expensive, okay, if you can get the thing for like $50 or $60, then over the course of a year, that trade would actually play out even better for you. But just because of the 7 a.m. But let's just go ahead and just stick with the simple straddle on that trade. $35, $40 maximum risk on the trade, and definitely look to be taking profit at a 1-to-1 move on it, okay? All right. So now that we have that one on up, let's go ahead and look on over at our next report. And again, that was the pound manufacturing sales for Tuesday at 4:30 a.m. The next report on our list is going to be the Canadian housing starts. And that's going to come out on Wednesday at 8:15. So I'll bring that up right here. And so housing starts right here on the Canadian dollar. And that'll be in the morning, so we'll be looking at either a 9 or 10 a.m. expiration. Let me pull it up. We'll figure out which one looks best. Okay. And let's see here. If we're looking at a 10 a.m. expiration, you got like 3 pips, 4 pips, 15 pips, 11 off this news. It's not moving at all. 9, 11, let's see, 38, 20. We got one of them that took off. It actually went up 67 pips at like about 8:30, and then it dropped all the way back down to about 20 pips. Just about every one of them is within less than 20 pips. So I would say, you could do as little as 20. Ideally 25, but as little as 20 pips would actually be acceptable on the trade. And 20 pip Iron Condor, entering at 8, expiring at 10 a.m. On that trade right there. And so Iron Condor, buy the lower spread, sell the upper spread, enter at 8 a.m., expiration at 10 a.m. on the dollar CAD on Wednesday. Okay, that's a Wednesday. It's July 9th for the 8:15 a.m. housing starts report. Okay, so now looking on over at the, let's see, we got RICS house price balance coming out at Well, that's fun. 701. Let's see, is there anything on that we can do? And as we're expanding out these stats more and more to try to get more and more reports. I mean, it was at 7. I wonder if you can hop in there. I think it's 7 a.m. Let me see what we got. And let's look at an expiration for, if it's coming out at 7:01 in the evening. Yeah, I mean, you could enter for, I guess, a 8, a 9, or an 11, right? So, again, it's 7 o'clock, taking it to, let's just say, 11 o'clock, maybe? And trying to get us as much, yeah, we could enter as early as 6, by the way, for the 11. But just trying to look and see, I mean, it's a pretty flat time, right? So, that time of night. And so sort of a rare time that we get a trade for the pound dollar then. We got 3 pips. We got 20, 10, 8. 8 pips move. There's one of them, and I'm pretty sure it wasn't based on this report. Home loans came out the same night. We don't have home loans coming out on the pound. That one had actually moved up like 40, but came back down to like 27. Then, let's see here, 11 o'clock, we got 1 pip off. So 11 o'clock, 8 pips off, 10 pips off, 10 pip, wow. So if you can get $20 or more on the pound tonight for the 11 o'clock expiration, that actually could be a pretty decent trade. So I'd be looking at $20 or more Iron Condor, enter as early as 6 for the 11 p.m. And $20 or more Iron Condor. So very, very, very simple, neutral trade. And now that's not tonight. That's Wednesday, July 9th. Okay. And the report, again, is on the RICS house price balance report, not your normal report that we'd normally trade. But, it's a very low-impact report, and that's plenty of time. And it looks like it's consistently, and that's over the last 12 releases that I'm checking out back from July 2013, looking at every release from each month. And we're staying within that 20 pip range. So if you can get 20 pips, then you ought to be able to pull off something out of the trade. If you can get more, then even better. Okay, so that knocks out that one. We got employment change happening later that evening. I'd also be aware on the yen at 750 before we walk into the Aussie dollar here. On the yen, 750 on July 9th. Be aware, 750. We got core machinery orders and tertiary industry activity. What does all that mean? All that means is, hey, there's news coming out. If you're a nighttime FX trader, if you're listening to the archive, be aware that the news report's coming out, because that obviously can have an impact. And if you go for the smaller moves, or you're doing any kind of premium collection, can sort of nick you a little bit right there at the end. So just be on top of that. Let's go down. Let's look at the Aussie coming out Wednesday night. We have the M1 inflation expectations followed by employment change. We're really going to put the focus on the employment change because we don't have a forecast number. But you do need to be aware, okay? Put that on hey, make sure I'm paying attention that the inflation expectation report, the M1, the money one, their inflation expectation is coming out at 9 o'clock. And so just have that on your calendar. So, again, if you're in a trade, you know that report's coming out right then. Then, of course, the number with an actual and a forecast that's coming out will be released at 9:30, and that's going to be their employment change. This is basically their NFP, okay? And so, obviously, you want to be aware of that one. And let's look at what a potential play you could do on this report. And if it comes out at 9:30, we could look at it at a 10 or 11. Most likely, we're going to be looking at 11. And let's see how it plays out. Let's see, we got 11. Now, 10 o'clock might be better. We'll see. We have 30 versus 25. Let's see here. 10 o'clock, you got 30, same thing. Got 45, 65, 65, 65. So we got some big moves there. Backing on back down to $35, $30. Basically 10 and 11 being the exact same. Why do I keep looking to see if it's the same thing on the last reports? If it's the same number on the last couple reports, if it's 10 and 11, 10 and 11, well, if I'm going for a straddle, then I'd go for the shorter one because I know I'm not going to get any extra movement. Okay, so why pay for the extra time? If I'm going for a condor, then sometimes I need that extra time because I need that extra premium to make the trade work. If they're the same, then I'll say, hey, 10 works just as good as 11. But basically, if you have to take the 11 because you need the more premium to make your iron condor premium acceptable, then take the 11. But if you don't have to, hey, take the 10. But if you're doing a straddle, you don't need to pay for the extra premium, so you can buy the 10 o'clock. But hey, if you can get the 11 o'clock just as cheap, then take the 11. So it's basically, I want more. I don't want to pay more money for a straddle than I have to, and I want as much money as I can get for a condor. And so the matter is now, I want as little time on a condor, and I want as much time as possible on a straddle. So it's always balancing those two out. So that's why I'll look at a couple different expiration times when I'm going through these reports to see what might be the best trade. 10 o'clock, can make about a 20 pip difference a couple of times, okay? So what I'm going to basically stamp on this trade is I'm looking at a $35 minimum profit, okay, on an iron condor. I'm not going to attempt a straddle on it because there's only a couple times where it really goes beyond that. 11 o'clock is acceptable for your expiration time. 10 o'clock is preferred. Most of the time, it doesn't move any additional amount between 10 and 11. But a couple times, you get an extra 20 pip move between 10 and 11, which obviously could hurt your iron condor. So if you can pull off a 10 o'clock for the same price as an 11, you'd have to enter, to be able to do that, you have to enter at 8 o'clock. So you could look at 8 for a 10, see if that's priced the same at 8 o'clock when you look at it, see if that's priced the same as the 11 o'clock. Okay? That'd be a clue, hey, go ahead and go for the 10 o'clock. But 35 pips would be the minimum profit, entering at 8 for a 10 p.m. You can enter at 8 for an 11 p.m. If you wanted to try to get that extra money in there, extra time, not only at the 11 o'clock, but you also could look at as early as 6 o'clock, you can enter the 11 p.m. expiration as well. So you may even decide to tier into it. Maybe you tier in at 6 to 11, then maybe you add another one on, either 8 to 10 or 8 to 11 as well, once the 10 o'clock come up at 8 o'clock. So hopefully you got that. But again, 30, 35 pips, minimum profit, Aussie dollar on the employment change, 11 o'clock or 10 o'clock expiration. You can enter as early as 6 for the 11. You can enter as early as 8 for the 10. And again, that's just buying the lower spread, selling the upper spread over on Nadex. Okay, so that gets you caught up for the Aussie dollar employment change report. Maybe you do, maybe you don't trade Nadex. But if you are trading the Aussie dollar, if you're trading currency, period, you need to know, if you're trading even indices, you need to know when these reports are coming out. You need to know what kind of market impact they have. So when I'm telling you this stuff, if something moves 35 pips, it's probably moved what it's going to move. It may move an extra 10 or 20, but the majority of the time, it's moved what it's going to move. So that's a good clue for you to look at a reversal trade. Maybe you have fib levels lining up or support resistance, or using deviation levels. Maybe, you got a signal to add on more, and that might be a place where you don't want to. Maybe you were in earlier and it took off and it went that far. You want to tighten those stops up. There's a lot of ways you can use this information to your advantage, to have an edge. That's what diagnostic trading is about. It's looking at ways other traders look at the market so you can be one step ahead. And this is the fundamental part to help you be one step ahead. Stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And like I said, we're just wrapping up each one of the news reports. We got a Swiss E-Trade set up. We got a pound trade set up on manufacturing production. We got a CAD trade set up on housing starts. We got another pound trade set up on the RICS house price index. Now we're going into an Aussie trade on the employment change report. That report's going to come out on Wednesday evening at 9:30 p.m. Eastern Time. And got it set up right here. Expectation is 12.3 thousand on employment change and a 5.9% on the unemployment rate. With those numbers in mind, let's go ahead and see what we might be able to expect out of the Aussie. And like I said, we're going in. We're looking at 10 and 11 p.m. So hopefully you got that number down. But what I was walking through with you on that is I was saying, hey, we're going in for 8 to 10. We're going in for 6 to 11. You could also look at 8 o'clock, looking at the 11 o'clock. So you have any of those choices for that Iron Condor of, approximately 30, 35 pips minimum profit on the trade, and that should cover you across the board. All right, let's go ahead and scroll into the next day. Let's look at Thursday, July 10th. And on the 10th right here, we got a trade balance. We got official bank rate coming out. We got jobless claims, home loans. Wouldn't expect anything on the trade balance report at all. So just because everything will be waiting on that official bank rate. either way, official bank rate is usually pretty quiet. And let me see here. But we'll look at the trade balance report just in case. So maybe we'll see something unique. Haven't really paid a lot of attention to it. Either way, you're going to be trading into really 7 a.m. for that. So be coming into the bank rate for 7 a.m. and we got 8:34. And let me see here. So my chart's running up 8:30. 115. That's a big night. That's a 4:30 release. What was that on? Oh, that manufacturing production coming out that night. We don't have it coming out the same night. Okay. So the only time we've really had that big move is when we had a big manufacturing production report, and it's not being released on the same night as the trade balance. We got asset purchase coming out at 7. So very quiet evening, not really much else happening. I'm going to go for an 11 to 7. I'm going to go for 30 pips on this trade, and that's probably more than enough. So 30 pips entering at 11 p.m. for a 7 a.m. expiration on Thursday, July 10th. 30 pips, minimum profit. Definitely want to be out by 7 a.m. And then we're going to go ahead and scroll on and look at the 7 a.m. official bank rate asset purchase facility vote. But with that, usually also very quiet, leading right on up to it. From there, what can we take advantage of? Well, at 7 o'clock, we could look at 3 o'clock. We could look at 8 or 9 o'clocks. Let's see. So what do we got? Looking at the bank rate and taking that on through. I'm just trying to look at what if you were actually to trade it to the end of the day. Got 65 on one day, 45, 12, 20, 30, 5, 20, 50. Completely random. So would not be touching that on that report. Okay, so we're out of that one. Looks like there is a little bit of a tendency. This thing, yeah, I mean, let me go down. I'm going to go down to 1 minute on this report because I want to see. Yeah, we're good. You definitely want that. You want to be out of that first trade by 7 o'clock because you can get some massive movement there on that bank rate if they surprise anybody. All right, we'll pick up the bank rate in a little bit more detail and finish off the rest of it the week tomorrow right here on the Diagnostic Trading Hour. Hope you all had a great 4th of July, safe 4th of July, and look forward to a good week.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.